Hey everyone, this is Nate from VoIP, and today we're talking about VoIP taxes and fees. What's legal, what's suspicious, and what you can expect to pay. Let's get right to it. Although no one likes paying additional fees on top of their monthly subscription cost, VoIP services are regulated by the FCC and subject to taxes. This means there are a few fees VoIP providers are legally permitted to charge their customers, such as, first, E911 fees, or Enhanced 911 fees, which fund emergency response systems to ensure that every VoIP phone number is linked to a specific physical address and callback number. This way, if you dial 911 from your VoIP line, emergency services can quickly pinpoint your location and send help. VoIP providers are required to include E911 services with every plan and must be able to route 911 calls to the appropriate emergency center when needed. Local and emergency governments charge E911 fees on a per-line basis. Depending on the state, expect to pay 20 cents to $2 per line in monthly E911 fees. Next would be USF fees. The FCC regulations require all VoIP numbers to pay Federal Universal Service Fund, or USF, fees that can be anywhere from 15.5 to 33% of their total revenue. While VoIP service providers can legally pass through costs of these USF fees to their customers on a per-line per-month basis, they may only charge customers the minimum amount required to fund their USF fees. Expect your USF fees to fluctuate throughout the year, as the required contribution factor changes 4 times annually. Next, number portability fees. While the FCC doesn't require service providers to charge number porting fees, it does allow them to charge a one-time local number portability, or LNP, fee to cover the costs of porting numbers from one phone company to another. LNP fees are charged on a per-line basis, and providers can only charge customers the cost of porting a phone number, generally between $10 to $20 per number. However, because VoIP providers cannot legally refuse to port a phone number because a customer didn't pay the porting fee, most providers offer free number porting. Next, federal, state, and local tax. VoIP service providers are legally required to charge and remit customer taxes at the federal, state, and local levels. While the amount of taxes you'll pay varies according to the services provided at your location, expect to pay the following: local sales tax, city and state taxes, federal excise tax, license and franchise taxes, transit and interstate toll taxes, and public utility tax. Next, we have gross revenue surcharge. While these fees aren't government mandated, they are legally permissible fees that offset your VoIP provider's federal and state taxes. These surcharges vary by provider and location. Next would be inter-carrier compensation, which is a fee one carrier pays to another to make, send, and end telecommunications over their network. Inter-carrier compensation fees vary based on the call type, the call's origin, and termination locations, and whether the carrier telephone network is wireless, local, or long distance. And finally, internet infrastructure surcharge. While not mandated by federal or state governments, some providers may legally charge customers to cover the costs of local internet infrastructure and network. Now let's talk about some VoIP fees that are technically legal, but often exploited and grossly inflated by unscrupulous providers looking to increase profit margins and pass the expense of the following FCC regulations onto their customers. First, early termination fees, or ETFs, which are the most popular type of VoIP price gauging that are charged to customers who terminate their VoIP service contract before its official end date, even if the customer's reason for leaving the contract early was the provider's fault. Always review your VoIP contract length before committing to a provider and aim to cancel your service at least 30 days before the next billing cycle begins. Next, feature add-on fees. While add-on fees for additional text messages, storage space, and toll-free minutes are standard, not all add-on fees are created equal. Watch out for low-quality SaaS providers that offer an incredibly affordable plan but hide the fact that essential features are accessible only as individual paid add-ons. Falling for this trap means that you may end up paying more to improve a cheaper plan than you would have to if you'd have just upgraded to the next pricing tier. Next, RCIP fees. These are regulatory, compliance, and intellectual property fees that are determined by the provider, not mandated by the government. These are designed to help the company pay for fraud prevention, trademark filing, and patent and copyright protection. RCIP fees are charged on a per-line basis to add up quickly. Next, federal program and regulatory recovery fees. While not illegal, VoIP service providers may overcharge users as an attempt to recoup the costs of regulatory fees for the Telecommunications Relay Service, or TRS, and federal universal service fees. Similar to federal program fees, regulatory recovery fees offset the costs of provider compliance with state, local, and federal telecommunication laws. They may also include E911 system upkeep, covering the cost of filing and reporting requirements, and bookkeeping. Next, administrative, service, and support charges. Umbrella terms like service charge or administrative fees are common ways for providers to pad customer bills without providing anything in return. These service fees may be one-time or recurring charges and are especially popular with resellers. If you spot any of these intentionally vague charges on your bill, ask the provider for a pricing breakdown and justification, because often they don't have a good answer. Potential VoIP taxes and fees are just a small part of your total VoIP bills, but you should always review existing phone bills and ask for a sample invoice before signing any contracts. Review invoices for instances of phone bill cramming, an illegal act where telecommunications providers tack on hidden, excessive, or fabricated fees like automatic renewals or upgrades, high overage charges, or surprise price increases. To keep costs low, ask about provider discounts and free trials. Opt for scalable, tier-based pricing, and limit third-party applications. For more tips on how to lower your operating costs, subscribe to our YouTube channel and hit the notification bell below. Till next time, this is Nate from Get VoIP.